All right, folks, listen, we all know there's a lot of moving parts when it comes to the market, and it's tough to juggle them all. In fact, very few can. However, one man has done so for a long time, becoming a Wall Street legend in the process. Let me bring in Yardeni Research President. And, I love our conversations. Let's just start off with the market, the overall market. For me, it's kind of weird because we go through these bouts where anxiety and people are nervous, pulling their hair out, and then a few days later, we're at an all-time high.
Yeah, absolutely. I mean, the emotional roller coaster is pretty intense, but at the end of the day, I think what's been driving this market higher is definitely earnings. I've been referring to it as FEMO, fabulous earnings momentum. It's been extraordinarily strong, and that's what keeps the market moving higher. I don't see that there's any particular reason why that doesn't continue. And meanwhile, one of the things that everybody was worrying about not that long ago was that this is like a bubble.
Right.
But if you look at the forward PE multiples, on information technology, it's about 20. On semiconductors, it was less. I looked, it was about 15, 16.
Right.
So they're selling the same as a market multiple. So it's nowhere near what happened in 1999.
And they have gone through extraordinary lengths to compare this to the dot-com era. I've seen every kind of comparison. I saw one this morning of Coca-Cola and Pepsi.
Yeah.
Did you see that?
Yeah.
When Pepsi took a market share and then any comparison they can make between now and then, listen, I understand history. It was a brutal time for anyone who lived through it. We both did. But I think some of the fear and the hysteria is just too much.
Well, it is, but that's what makes the market so interesting, right? It's looking through all that and seeing the underlying fundamentals. And the underlying fundamentals have been great because the economy is doing really well. It's growing. The labor market is in balance. Supply equals demand at 4.3% unemployment. We still have a little bit of an inflation problem that the Fed has been late in addressing, but the bond market's addressing it.
Yeah, I want to ask you a little bit about that in a second, but I want to pick up on this AI trade and rotation, because there's been a rotation, a broad rotation trade, but even within the AI trade, we're starting to see rotation.
Yeah. Well, you can't really invest like that. I mean, do you know how to pick the top in software and then come back in at the bottom? Do you know how to pick the top in semiconductors and then come back at the bottom? I think when it comes to the AI trade, there's a lot of uncertainty. We don't really know who's going to make a lot of money. We don't know who's going to go out of business, but we do know a lot of money is being spent in that area. So I think that's one area where you definitely want to have a diversified portfolio. But the clear winners are going to be the financials, the industrials, healthcare. That's where we're recommending overweights because they are currently and will continue to use AI and other technologies to increase their productivity and profitability.
Right. And we're starting to see that more and more with these names.
Yeah.
Let me go back then to tomorrow, this jobs report. Where are we right now as investors? Are we rooting for good news or bad news? I lost track.
Well, maybe we should just tune it all out and wait until a year from now until they revise the data. My attitude towards the employment data is the first cut is when it supports my story, it's great data. When it's not, it's going to be revised. It's not very reliable data, but you want to look at all the labor market indicators. And we're expecting something like 50, 60,000 increase, which is a so-called break-even level.
Right.
But initial unemployment claims keep coming down.
We're under 200,000.
Yeah.
2 weeks in a row.
Yeah, it's extraordinary.
I could have never have guessed that would be the case at this point.
Yeah.
So from the Fed, a lot, because Warsh is trying to do something maybe revolutionary. He's getting a lot of pushback, but for me, it's tough. Even when we look at these broad numbers, like the consumer is strong. Inside there, you've got a lot of Americans, a vast majority of them who live in paycheck to paycheck. And I don't even know how you can do Fed policy based on the notion that the consumer is strong, when the majority of them are saying they're not.
Well, that's a pretty controversial area. A lot of people believe in the so-called K economy, rich are getting richer and the poor are getting poorer. I've dubbed it actually the G-shaped economy rather than K-shaped. In other words, it's generational. The reality is you've got $100 trillion being held as net worth by retiring senior citizens.
Right.
And they don't care about interest rates. They actually want interest rates to go up.
Right.
They don't really care about the labor market because they're retired. But they do care about the unemployment rate if it's affecting their children. And so there's a lot of intergenerational transfers going on. I think that really explains why the consumer is so strong. So the young kids are having an affordability crisis, but I think in a lot of instances, the parents are ponying up.
Yeah, and we just saw a report 20% of parents are showing up to job interviews too. I guess it's saying, if I'm helping you pay the bills, I want to help you get a job too. Hey, before I let you go, gold's making a pretty intriguing move here.
Absolutely. Yeah, it looks like it's bottoming. I mean, gold is for technicians, basically. Fundamentals are kind of tricky. But I would say that it looks like it's bottomed at 4,000. It's had a nice bounce off that level. We lowered our year-end expectations a few months ago from 5,500 to 5,000, and I think that's reasonable.
Speaking of targets, you're still at 82 or 82.50?
Yeah. By the end of the year for the S&P 500.
I always sleep better at night when I know you're at 82.50. When I know, when they say Ed's lowered his target, I can't get any rest. I got to talk to you.
Well, I may be not bullish enough because the earnings story is stronger than even I anticipated.